So when the working capital is managed,
Organize the funds and meet the requirements of business. One of the best source available for any business to meet its financial needs is finance from banks. So just revise the working capital. It's a fund which are required for my daily operations. It is a calculation of difference between current assets and current liabilities, and it is used as health indicators. So, in short, working capital is fund requirement and used as health indicators. So, let's move further. Why working capital is important? Because it will help for immediate payments. It will help as operational immunity because when I required funds for my operations, if I arrange from the banks, it is easily available and at convenience rates. Second, if I require more and more working capital, it's an indication that my business is growing and I require more funding. Now, what is the role of banks in working capital financing? As we discussed yesterday, there is always a gap between inflow and outflow. When this gap is wider, I need to search for the funds from outside source. So keep my operational momentum and meet my unexpected or unplanned expenses. I need to arrange the funds. So to bridge the gap between inflow and outflow, I need to keep the momentum of funds moving. So considering this, I need to arrange funds. And here, a bank plays an important role. Bank will ensure that if my receivables are short or due to some reason I need to increase my production because the orders are great. In that case, I need to have more and more production expenses. So if I'm able to manage the liquidity, it will help me. But if I'm not able to manage the liquidity, it will bounce back. For example, suppose I'm producing buying 10 units, then the production is done and I'm supplying in market 15 units. Fortunately, the market has grown from 15 to 20. Now the pressure starts falling back. So my production cycle required more. So for these increased expenses, if I did have funds, then the pressure is created back to the suppliers. Why? Because I will demand more goods. Instead of 10, now I'll require 15, but I don't have money to pay. So I will lack confidence. I don't have production expenses. I lack in confidence. Ultimately, I'm not supplying market, so I lack the marketing. My customers increase demand. I don't have products, so I will lack. So unfortunately, this will create a negative scenario for organization. This will create an impact that organization is not growing. If I take other scenario, that if I have a plenty of raw material and plenty of demand, and suddenly this demand increase or decrease something, if I'm not able to manage this operational efficiency, then this difference between inflow and outflow will cause a delay. I need to ensure the difference between inflow and outflow is managed positively. It has appropriate finance, it has appropriate source analysis, classification, and control because expenses are always unexpected. And if I want to keep the operational movement in unexpected environment, I need to have finance from bank. Anybody's any doubt in this? Please put in chat box. Let's move further. Why we should take support from banks? Because banks are financial institutions. They have technical knowledge, they have consultancy, they have tailor-made solutions, and they can share variety of fundings depending on my needs. So for funds, knowledge, and consultancy, they are very helpful. They can provide various type of short-term facilities like short-term loans, short-term credits, short-term borrowings, and other supplies. Compared to other sources of finance, the terms and conditions of working capital management, the financing from bank is more cost effective and technically sound. So the risk taking and the challenge about rate of interest, amount, and flexibility or arrangement of funds is minimum when I take finance from bank. So considering this, we normally go with the banks. First, they will be very good consultant and they will suggest the better ideas. They can provide me variety of short-term credits. They can be flexible in the rate of interest and reschedulings. The level of risk with the bank is minimum because banks are creditworthy institutions and follow the government norms. So, considering these points, it's very easy and convenient to take the finance or support from banks for financing my working capital needs. Now, what are the types of working capital finance offered by bank? We already discussed this yesterday. They provide working capital loans. They provide loans against my invoice. They provide loans against my purchase order and against my goodwill. Now, these are the new terms we discuss. Additionally, banks also provide finance as a percentage of sale or by mortgage or hypothecation of inventory. It can be finished goods, semi-finished goods, or raw material, depending on my application. The banks also support the government schemes qualified for small business and the regular financing they will do by overdraft and cash credits. Let's talk about the real world examples. Manufacturing business faces a slow quarter with reduced order, but ongoing wages and fixed costs are there. So as I given example previously, increase in order or decrease in order, it depends on market fluctuations. But this fluctuation fire back regarding need of funds. If the orders are increasing, I need additional funds for arrangements. If orders are decreasing, then my current role of operations may be higher. So in both the cases, I approach the bank. I request them to provide me short-term credits so that I can finance the situation. Now, in this case, I will borrow the loan to cover wages and maintain operations. If I maintain the operation in my downtime, that is, when market is down, then I create a confidence or trust in the worker's mind, and this will help to overcome the slowdown in business cycle. The second example, a retailer discovered bulk purchasing by offering discount on some popular unit. For example, in festivals in India, people buy in advance. They consider if they buy in advance, this will be opportunity for them to sell on more higher rates in special events. So they will buy, like wholesalers will buy more goods from manufacturer without paying cash, and they will ask for more terms of credit. Now, in this case, the business is growing, sale is happening, but the encashment is delayed because of opportunity identified purchase. So I have sale, I have business, but no cash flow generated. So in this case, the banks will help me for providing short-term loans and help my strategic decision to maximize growth. Once the seasonal opportunities are in cash, the debtors they will start paying back and I can repay the bank. Meantime, the funds for operations, the funds for manufacturing, the funds for purchase will be helped by short-term loan. So even when my growth opportunities are there, I required funds. It can be helped or assisted by finance from bank. Now let's talk about what are the benefits and what are the risks which are involved if I take finance from bank. Please read the slide. I'll wait 1 minute and then I'll explain. So let's talk about first benefit. I have easy access to the bank. I can easily approach for my terms. I'm doing a regular business with the banks, so they are convinced about my creativity. I'm not separately required to share what I'm, why I'm, and how. They have my financial details, so they will understand how successfully I'm going, and easy way of finance is available. Similarly, if I have issue about receivables, payments that can be easily controlled with the help of banks by taking more service like factoring, receivable management, and technical guidance. And this will create a backbone of line of credit for my future needs. So banks has expertise, funds ability, and easy approach for my short-term borrowing. Now, when I say I have opportunities, I have some risks. Banks normally work with collateral requirements. The finance will not be available without any mortgage or collaterals. Secondly, the rate of interest will grow when my duration of borrowing will increase. Similarly, if collateral guarantees are not available, or if a sudden need for finance, it may require personal guarantee. So, first, rate of interest, and second, the requirement of collateral, either in person or in assets, is a risk for my business. And most important, if I do not follow the payment deadlines, the instruction from the bank, or if I have not been successful in managing the funds and repay the short-term borrowings, it can create a financial distress and it will be a potential threat for my business. Now, what are the strategy tips for business? If I take a finance from bank, one, maintain a good record, follow the proper accounting system, and keep the records up to date. Align your all activities with the flow of cash. Ensure every activity is cash oriented and more funds are created. When you're talking to any bank, negotiate your terms, negotiate your tenure, negotiate your rate of interest in more profitable way. Try to have maximum funds at lower cost with less collateral or guarantee. And finalize repayment schedule as per the business growth. It has to ensure that the rate of return should not be more than my turnover, or the repayment schedule should align with my past experience and future expectations on proper analysis. It should not be hypothetical. Now, what are the emerging trends in bank finance? The digital lending, where there are different apps, digital platforms, and online facilities where I don't require to approach the bank in person. With the help of AI tools and alternative data, I can easily find various digital instruments, digital payment tools, and through these tools, without entering the branch, I can apply for the loans and I can avail the service. So, introduction of AI and digital facilities like phone banking, digital banking, internet banking, app banking help me for encash and apply and make available working capital more easily. So if I conclude about working capital finance from bank, it is very trust-based decision and creates a sound health for any organization. It is always the vital foundation of sustainable working capital management decisions because I have compatible source of finance with agreed terms and a confirmed source where financial distress are normally minimized if negotiated properly. So getting a finance from a bank is an easy approach for meeting my current needs, and it is nothing but a trusted partnership which I create with the bank for my future growth. So for any doubts, Any doubts? Okay. Now what I'll do is I'll discuss more in detail about financing options. Please remember there will be question because working capital no more numerical is there. There are theory questions. So we need to study this chapter based on theory. Okay. In PPT, we are seeing the first option is called invoice finance. Now, invoice is a statement where I mention if I'm selling the goods or if I'm buying the goods. So when I sell the goods on credit, I have invoice which contains the details of my production, the details of vendor who I buy the goods, and terms of sale. So in first invoice finance, I'll approach to bank. I'll tell them that okay, this is a bill and this is a individual or organization who has purchased the goods and now I require money for the same. So they will check my invoice, they will check my conditions, and based on my invoice, they will decide whether they can provide money or not. Normally, suppose invoice value is 1000, they will provide the discounted. For example, if invoice is of 100 rupees and rate of interest is 8%, then they will provide me money of 92%. And the difference is interest. So in invoice financing, they will provide up to 90% value of invoice or more depending on my terms, but they will not provide me 100%. Suppose 10% is interest, they will provide me 90 rupees. If the interest is 15%, so here they will provide me only 85%. But when I'm repaying the amount, I'm going to pay 100. So initially only they will deduct my interest part. Secondly, they always tally my value of invoice with my sales limit. So I can use discounting or factoring as one of the source for finance. So in invoice discounting, what I'll do, the I will approach to bank and instead of loan, I'll sell my invoice to bank. Sir, suppose my due date is now 5th of October and today is 20th September, but I require money. So what I'll do, the bill of 5th October of suppose 1000, I will approach to bank and bank will give me 900 rupees. So my current need is complete. When the due date is there, bank will go to my debtor and collect the money and close the account. If in case the person do not pay the money, then the bank will come to me and ask me to pay the 1000 rupees plus penalty. And I have to recover this penalty and amount from debtors in future case. So this is the normal. Many cases, the businesses they go with the something called factoring. We're going to discuss, but factoring is an agency where I will deposit my all invoice, and they will approach to debtors on due date, and instead of following deadlines, they will collect, and after deducting their part, they will transfer the funds to me. So the banks also work as agents, and this will help for management of their funds. So indirectly, I can first deposit invoice and take the loan, or I can avail the factoring service and take the benefit of finance. I'll wait for 2 minutes. Please read this slide. Any doubts? Let's move further. The second option available is purchase order financing. In purchase order financing, instead of sales invoice, I will have purchase order. Once I confirm the order for payments, I approach to the bank. I request that a huge cycle, and this is certain pool of orders I'm having. For that, I have purchased, and now please honor my payments regarding purchase. So what bank will do? Bank will directly pay lenders and help me to complete my operational cycle. So instead of now debtors, I'm asking to get the finance based on my purchase order. But when I'm taking the loan based on purchase order, I need to provide hypothecation or collateral because this is upfront capital need and do not support any vital base. So, like invoice financing, I can also do financing based on purchase and take support from bank. Now, benefit of purchase order financing is if till the due date of payment to creditors, my payments are generated, I don't require money from bank. But if the payments are not generated or they are delayed due to some reason, then bank will hold my payments for certain duration. Now, this is my line of action. If suppose I purchase, I do production, sell in a market, but due to some reason, the sale is not generating payments. Then, while repayment to supplier, it will be delay in period. And this delay is managed by invoice, sorry, purchase order financing. So if I'm poor in debt collection, this is easily managed by purchase order financing. I'll wait for 1 minute. Please read the script. If in doubt, post in chat. Let's move further. Now, bankers also take the loans of, so loans are already known. We will not discuss this. Okay. So we discuss something called our digital payment. It is one of the other source of working capital financing. So there are some fintech companies and fintech banks which also provides short-term borrowings to the businesses for their growth. The benefit of them is flexible terms, easy availability, quick funding, and lack of physical paperwork. So they are always helpful for managing my business. Similarly, the repayments and rescheduling can easily be variated by login and just email request. So the fintech and modern innovations, they are always profitable. So when I want to choose the working capital from bank, I need to have first my business assessment where the bank will check whether my business is functioning properly. They will check the size of business, its yearly fluctuations, and cash management. So, if I'm approaching to the bank for better finance, I have to ensure that my credit record is clear, every account or transaction is properly documented. Similarly, I need to find out the banks where I will have low interest rate options and stronger credit policies. The maximum duration with less interest is always a favorable situation. If any bank is specialized in any kind of specialized product service or they are working for specially some particular sector, then I need to take care that I'll approach these banks more because the seasonal fluctuation or changes these banks will help to manage easily. While choosing a bank, the most important is less documentation, less involvement of agents, less process fee, and quick dispersal should be available. So if I want to choose working capital finance bank, I need to decide these parameters. Please read the slide. I'll wait for 1 minute. So let's move further. This is a comparison between different facilities. If I compare the interest rate, normally interest rates are lower for specialized loan facility and it will depend on my terms and condition for invoice financing and purchase order finance. If I approach directly to the banks for loans, they are normally fixed. But if I take advantage of online banking, the rate of interest are normally high. For invoice financing, the approval time is more quicker, but for specialized loans, even though low rate is there, it is take normally high duration. In invoice financing, the invoice is my collateral. In purchase order, it's a purchase order. So if I compare, then my invoice financing or purchase order financing are mostly convenient way to approach the type of working capital finance because these are directly related, low interest rate, comparatively less documents, and very cost effective rate of interest. I'll wait for 2 minutes. Please go through this slide. Let's move further. What are future trends in working capital finance? In domains of digitalization and AI, the data analytics and AI integration even more. The bank will use AI for credit assessment and analyzing the risk profile of a company or an individual. The blockchain integration will help the technology advancements and more transparency and security. Blockchain involves integration of different source of information together, creating a flow of data. The banks will more come with hybrid solutions because of technical innovations, and there will be more cooperative and collaborative solutions for my future growth. So in short, using AI, blockchain, and revenue-based funding, the more greater and better source with banks are available. Now let's understand the working capital finance ecosystem in 2025. We are now shifting from regular traditional banking to the fintech banking. We are approaching more strategic plans and collaboration where less interest rate and more amounts are financed in quick time. The banks will not only provide money, but they will also provide consultations and ecosystem where they will ensure the growth of business and speedy recovery of loans. The banks will do crowdfunding or peer-to-peer depend on business risk and nature of business. Crowdfunding involves funding by two or more banks in same time, whereas peer financing involves one bank financing one organization. So financing by bank is always a better operation and it is a good strategy system because of the technology innovations and less operational risk and more funds. So if I want to arrange the funds for working capital, I need to take advantage of banking innovations and benefits. Just read this conclusion slide. If any doubts on topic finance from banks, please ask it. Otherwise, I'll go for next topic. Please read this slide. No doubts. So I'll start the another chapter. We talk about working capital by banks. Now let's talk about how I can manage my internal funds and how these funds can be utilized for my future needs. So let's talk about the topic called cash management in working capital. Let's understand working capital and cash management and role of cash management in working capital management. So we already discussed this. Okay. Cash management is an ecosystem or it's the process of collecting, handling, organizing, investing, and managing cash resources so that operational efficiency is enhanced. In cash management process, I will ensure the sufficient cash is available for daily operations and I don't require more borrowings or avoid borrowings for my requirements by planned expenses. If I have sufficient cash available, I'm not required to approach the external parties and pay the interest. Similarly, I need to ensure that the cash or the funding is not ideal. If I have more funds available in excess of my requirement, then in such case, I need to go for investment decisions. So effective cash management will help me to mobilize my available cash or to schedule my cash payments in such a way that they are optimized for more investments and they are generating more profits. So in short, I need to ensure the funds are properly generated and the optimum care is taken that more and more revenue out of available funds is created. So I'll wait for 2 minutes. Please read. Anyone, any doubt? Now let's move further. Why cash payment is important? Suppose this is my funds available and required for my working. If I require these funds for my working, there are two conditions. If suppose instead of this, I'm only available these funds, then I'm at short. And if I have more funds, it is called as excess. If I have extra money and I keep it my company, it is total wastage. If I have shorter funds, I will lack. So extra will create issues, more wastage, more application. Shortage will create a crisis. So if I'm not managing my cash management, I can have extra or shortage, resulting in wastage or crisis situation. If it is a wastage, I will lose my alternatives. Whereas if I have shortage, I'll face the liquidity crisis. Similarly, if the situation of extra shortage recurs, this will create a strategic disturbance and will lead to confusion and lack of trust in organizational efficiency. So if I need to manage organization efficiently, I need to ensure the optimum value of cash is available. Extra or short will not work in favor to organization. So please read this slide more importantly because this is one of the reasons why cash management is required. Anyone has any doubt? Let's move further. Let's understand what are the core objectives and what are the core challenges in cash management. The first objective of cash flow is minimize cost by harvesting the cash sources in such a way that I don't require borrowings and internal funds are generated more efficiently to finance my operational activities. So if I optimize my cash flow, that is collecting more frequently from debtors and delay or more credit from purchaser, then more funds are available and I can maintain my liquidity. So with less cost or otherwise no cost, I'm maintaining my liquidity and forecast futurely, then my business will grow. And this all is possible with the help of cash management. So my objectives of cash management is optimal cash flow, maintain the proper required liquidity with less cost, and forecast accurately about future needs. Now, what are the common challenges? The first common challenge is inventory inefficiency. Inventory is the most important factor involved in working capital. Absolute stock, slow moving goods, scrap, these three inventories, I need to ensure their generation, their encashment, and better approach. If the slow moving goods, I have more investment, it will block my funds. If recovery is poor, it will block my investment. Or if I buy the absolute stocks, it will create wastage. The second challenge is collection delays. If the collection schedule for debtors and creditors is not effectively managed, it might create a delay and confusion where I need to manage the gap and go for the borrowings. So if I properly manage my collection delays, it will facilitate for better funds management and it will eliminate the risk of borrowing from outside. Most important to all this is to do a forecasting about future requirements, for which I need to have a proper credit risk assessment process, which will ensure my future needs, future risks, and strategies to overcome shortage or disrupt by excessive surplus. So, planning about future activity, managing inventory, controlling payments to debtors and receivables from, sorry, payments to creditors and receivable from debtors with proper forecast is a greater challenge in cash management. I'll wait 1 minute. Please read this slide. If you need doubt, post in chat box. Let's move further. Normally, the production business has more funds blocked in two terms. One is in inventory, and second is credit sales. So, if these two factors are reduced, then I'm able to manage my need of funds. For example, if I'm paying creditors after 4 months and debtors are paying me in 2 months. So gap of 2 months will help me to manage my outstanding. In this case, I have advantage of more better cash flow. Similarly, the schemes like just in time, EOQ and all others, if I apply and I manage my inventory, I ensure finished products are sold directly in the market and less scrap is generated, so I can achieve more inventory management and more recovery of loans. So for better cash management, I have to ensure proper outstanding management and proper inventory management. Now, next session, we'll discuss about strategic techniques of inventory management and cash management, which we can use. We'll talk about how inventory management and cash management is important. Then, what is the role of leveraging? Then, we'll talk about importance and influence of cash management over financing. So that's all for today. We'll meet tomorrow on same time and continue this session. It is again reminder, those who are not submitted OGT or Fieldwork, please make sure that CC, OGT and Fieldwork you are submitting on time. Thank you.